If you're a forex trader and probably this is your first year, your second year, or your third year of trading, and you cannot boast of 1,000 US dollars in your bank account or your trading account, then I think it's time for you to pay attention to my videos, and I promise you will learn a lot from this particular video. Now you see, there are three powerful points that the smart traders don't want you to know, because you knowing that particular strategy will make you perfect in trading, and you might grow and lead your way to success. Now in this particular video, I'm going to be teaching you everything you need to know about that particular strategy step by step. Probably I'm trading with that strategy. It's the strategy that I use, and I know so many big traders who are also using that particular strategy to make from the market. If you're able to watch this video to the end, I will teach you the 3 key points that you need to know for you to be able to mark out your daily bias and mark out what you need from the market in a day and place your trade as easy as that. Now, so first of all, when we start this time around, we are not using any illustration. We are diving into the market for a real market price action. Now, this is the AUD card. Now, for example, now today is Tuesday and I want to trade AUD card. First of all I need to do is to read the market price action. Reading the market price action is like looking at the bigger picture of the market. Understanding the price market action is what you also need as a forex trader. Now, looking at this particular market, you can see we are in a bearish move because price has been breaking structure to the downside, and keep going to the downside. So therefore, we are in a bearish move, and all we need to do is to stick to our sell position and join the flow, join the market. Don't trade against the trend. Now, first of all, you don't need all this particular price action. You don't need all this particular data for you to be able to know what is going to happen in this few market move. No, all you need to do, just go to the recent charts and analyze the market. Now, first of all, this is a AUD card, as I said earlier, and now looking at the recent charts from this particular man over here down to this particular place. This is where we'll be doing our analysis and predicting where the market will go, maybe making some profit out of it. Now looking at this particular chart, you can see this is a break of structure here. This is a change of character because price has been pushing to the upside, and all of a sudden price starts changing character to the downside, giving us a change of character. This is a change of character. This is a break of structure to the downside. This is also a break of structure, but I may see this as a liquidity sweep because price didn't give us a clear break of structure. So therefore, this is the clear break of structure over here. Let's check this out. This is the clear break of structure over here. I normally use this site to do my back testing, go chatting. I use it to do my back testing. You can go and search about it in your Google Chrome and you can use it to back test. Now, this is the current market break of structure. Now you can see this long wick. So this shows that this particular break of structure is a strong break of structure and also a liquidity grab. So you may not know whether to sell or to buy, but judging from the bigger market and price action, we are in a sell position, we are in a selling movement. So therefore, you need to keep on selling this market. If you are buying, just know that the buying will not last long. It will only take a while. But since we are selling, let's do it this way. Now, after marking out this particular structure, this is all our break of structures to the downside. This is a bigger picture, which is a bigger break of structure, BOS, which stands for break of structure. Now this is here now. So now what we need to do is to mark out the origin that caused this particular break of structure. This is just a normal market analysis. We're still coming to the entry model. You understand now? So marking out the origin can also be seen as an order block which causes our break of structure, and also the order block with a confluence of a fair value gap. Fair value gap is very important. Now this is our order block over here because this is the last consolidation before the break. Now some of you guys might mark this particular one out here as the order block. This particular man here as our other block. Yes, this is another block, and this is also a fair value gap in between it. But if you can see, this is just at a premium, this is just at a discount area. Price is not at the premium area. Now let's check, let's use our Fibonacci tool. Just to pick your Fibonacci tool, you measure from the top on this. Let's set this thing. Now let's do our setting. What is the video so you can also know to do your setting? You take this out. No, we'll leave this 0 there. We'll leave this 0. We'll take this one out. Take this one out. We'll leave 5. We'll take this one. Take this one. We'll leave 1. We'll take this one out. Any other one there should be taken out. This one out. This one out. We just need our premium and our discount area. Okay, now we'll take this one out. So this is all we have here. Yes, guys, this is all we have here. And so if you want to do this, you measure it down to this particular area. Okay, now when looking at it, yes, this is our discount area and our premium area. Now price is already in a discount area, and this particular other block is in a discount area, but I don't think it's a very good place to buy. It's a very good place to start selling, so to start selling from this particular area. So it's either we wait for market to tap in fully to this other block over here, and also showing a weakness in, if you are using RSI, relative strength index, then so therefore wait for market to tap into this particular place as a fully confirmation before we do anything. And this other block is invalid. This might also be a liquidity sweep over here. Now if those asking for our fair value gap, this is our fair value gap over here. From this particular one over here to this second one over here is a fair value gap, and as you can see, this is a old low and this is a old high, all joining together as a confluence. Now let's dive in. Okay, let's leave this now. So what's next we need to do? Now let's go straight to our entry point. Now for us to enter this particular market, we need at least 3 particular things. First of all, a liquidity sweep. Price must sweep liquidity before diving into our order block. There must be a liquidity sweep before diving into our order block. Then we'll make our entry from that order block after we see a change of character to the downside. Price must dive into this order block. Then we'll make our entry after we see a change of character to the downside. That is where we're going to make our entry. You understand, guys? So now what we need to do now is to go down to our 15 minutes time frame. Now 15 minute time frame, what do we got here? This is our fair value gap. This is everything we need. Now we just need price. Let's modify this. Now let's also understand the market price action of this 15 minutes time frame from this particular area here down to this particular area here to consider the market movement of price. Now when looking at that particular place, this is a break of structure over here. This is also a break of structure over here. And again, this is a break of structure. So you can see we are buying, we are selling, we are breaking structures to the sell side, breaking structure to the sell side. This is also a new break of structure over here, a recent break of structure over here. And some of you guys might just start buying from this particular area, marking this place as our order block, and start buying and selling from this particular side. All these are liquidity sweep. All this you see here are liquidity. All these are liquidity. Price is going to sweep out all that liquidity, sweep everything out before tapping into our entry. As I said earlier, our 3 entry model: first of all, liquidity sweep; secondly, a break of structure; and thirdly, a valid order block before we start selling in this particular market. Now from our 15-minute time frame, we're also bearish in our 15-minute time frame. We are breaking structure to the downside in our 15-minute time frame. In our 4-hour time frame, we are breaking structure to the downside, and in our daily time frame, we're also breaking structure to the downside, giving it a very sure prediction that yes, this particular setup is the A+ setup. Now let's dive into this market and make a little money. So now when look at this particular thing, now let's wait to see if price can push up to this particular area, sweep out our liquidity, and we'll then know what else to do. Also, don't forget that this is also our liquidity man residing below above here. So if you think you can just come and start setting your pending orders over here, price might just take you out here, sweep out this liquidity above here before going down. So be wise and follow the footsteps of the market. Let's wait. Price is just creating liquidity and creating more liquidity to sweep out retail traders, those that cannot be patient. Now this person that entered this trade here, price already hits their stop loss already, and keep going and keep pushing to the upside. Creating more liquidity for you guys to enter. If you're not patient in the market by now, you must have hit your stop loss. We are going to be patient for price to tap into our entry zone. Now we are in already. Now, assuming we enter this trade, luckily for us, price will hit our stop loss. But no, we need entry model. Now, first of all, we have got our shape of liquidity. That's our first entry model. Our second entry model is our break of structure. That's the second entry model that we need. Let's see what we've got. Let's see what we have. Let's see. Now, price just sweep a minor liquidity again above there. Look at it, guys. Look at this bigger picture. This is a sweep of liquidity over here. You can see it. So you know that it's time for reversal. So now we're waiting for again. We're waiting for all these things are happening in our point of interest. You understand? So we're waiting for a break of structure to the downside to confirm this particular setup. After a break of structure, then we'll mark out our valid order block and we set our entry ACPS. This is not a valid break of structure, okay? Wait and calm down for a valid break of structure. So guys, so I've gotten our break of structure. This is a break of structure. Let's see. Let's see. Break of structure to the upside. And this is our mitigation block. This part of the 7 refresh points that we have in the market. This is a mitigation block because this is a failure swing. Price fail to move above this particular area, causing a mitigation block. This is a failure swing, and a mitigation block plus our a tiny fair value gap, which is also very powerful. A tiny fair value gap. Let me mark it out. I hope you guys will keep seeing. Look closer. This is a tiny fair value gap. Let's take this big fair value gap first out. So this is a tiny fair value gap again. Another tiny fair. This is another. Okay. So from there to there is a tiny fair value gap, and with a confluence with this mitigation block. So this particular area is very solid. Then don't waste time after seeing this particular thing. You don't waste time. We're taking our entry from that fair value gap, and our stop loss residing above this one over here, and our take profit. We are going all the way down, making from the market. Our take profit should be down to this particular area, giving us a 1:3. Yeah, with our first take profit 1 should be here, our second take profit 2 should be here, and our third take profit 3 should be here. Yeah. So let's watch and see what the market will have to deliver for us. And guys, we are in already. Look at it here. Price give us a sniper entry. You can see it, guys. A sniper entry. Price touched that fair value gap, but let's watch and see what the market has for us. Now, okay, let's watch. Now this is a full entry. Now you can see it now. For example, if this sniper entry didn't trigger for you, you can see this full entry will also do what? Trigger for you. So one of them must trigger. And some of you guys, if you don't know how to manage your trade, you might have started stacking out your position after you see price create this particular movement. After I see price getting this particular movement, you might have start stacking out your sell position. But don't be afraid. Once you have confidence in the market, trust the market, do your thing, and leave the rest for the market to play out. Now we are already in fully, and what next? Price will keep on diving to the downside to hit our take profits, our full take profits. See you guys in our next video, and don't forget to like and subscribe to this particular video.